Good morning, everyone, and welcome to the weekend update. Just like last week, I'm going to start today's video off with the 10-year Treasury bill because this is the thing that is causing all the drama in the market and has been for the last couple of weeks. Up and down interest rate move. The real thinking behind it is the higher this rate goes, the more money is going to flood out of the speculative stocks. Now, we've seen that happen over the last couple of weeks. Friday, starting Thursday, but especially on Friday, we're starting to see most stocks shake off what we see happening in what's going on with yields right now, and that is a very good sign. Over the last couple of weeks, we've had both 90% of the market just tracking all the upticks and downticks with the large cap stocks. We started to see that abate a little bit on Thursday and then definitely saw it on Friday. So that in itself is a positive sign going into this upcoming week. We've got a big Fed meeting this week on Tuesday and Wednesday, so that's going to muddy the waters a little bit. You're going to see a lot of movement up and down on some of these large cap stocks in anticipation of the Fed saying something or not saying anything, like what happened with the temper tantrum there a week ago. If we look at the daily chart here, you can see we continued to break out. You're looking at this chart and you're going, why do things over the last couple of weeks seem so hard when we see this breakout to new all-time highs? And really, the reason is, and you have to keep in mind, just a handful of stocks determine the movement in the Dow. United Healthcare Group, 7%. Home Depot is 6%. Boeing, if we look at the Boeing chart, BA, that is a almost 6% piece of the Dow. So you see these kind of moves up here. That's why we're seeing the Dow do this. It's a movement into the boring, sleepy, large, cyclical, boring stocks, and that's why we've seen a lot of air come out of a lot of stocks. QQQs, we did get that nice big bounce. We were looking for a bounce back to the 20-day at 316. It hit it, peeped a little bit above it, and has come right back down. Now, this is a nice little bullish falling wedge. The Qs are still deeply oversold, as you can see. Some indicators are looking for a good turn up. What I'm using to determine the movement in these stocks is, of course, Tesla, the leader of the Qs. Tesla's actually setting up very, very nicely here. It's kind of ignored a lot of iffy, bad, bashing news out there over the last few days and looks like it could make a move this week up to the 750 area. That's where the 200-day moving average is. It's setting up here for a nice little move, and if this stock is able to go up, that tells me the rest of the market, the kind of stocks that we play, are going to have a good upcoming week. Now, it is still a day trade market. We've only got we added a couple of new swings during the last week, but the emphasis is still on it being a day trade market, really because we don't know where yields are going to go and how quickly they yank the bids out from underneath most stocks in this market, and it's a Fed week, so we're still tiptoeing around in this market. We did the exact same thing after the market sell-off in August. If you're around right there, you can go back and look at some of those videos. We kind of tiptoed back into the swing plays and then really started rocking about a month later. So that's the scenario I'm looking at right now. AI is our other mega cap play. This one finally looks bottomed out. You can see that significant sell-off over the last month, and now we're getting this curl bottom. So even though we've seen the Qs have some weakness, this stock looks like it's finally ready to rock and roll. That was a very good performance late on Friday on this stock. First target, 20-day 106, 120 to 130. MACD is still deeply oversold. RSI is curling up, and you can see stochastics here. So AI, barring a meltdown in the tech stocks this week, looks very, very nice for an upward move. Now, the big driver on a lot of stuff has been crypto. This is the Litecoin. I haven't talked about crypto in a while, but you recall last year in late summer, we picked up Litecoin. This was my favorite crypto edition. We were buying this one in the 50s. We're now up almost 400% on this position. We're about to get a golden cross. This is when the 50-day crosses through the 200-day. That is on the week. This is a weekly chart we're looking at right here. So this is very, very bullish. Bitcoin is doing very well this week. Let's see if they allow it to continue into tomorrow. But this is looking really good, and this crypto rally is far from being over. Ethereum is about to break out again. Now, the reason I bring this one up is NFTs have all of a sudden taken the market by storm. And we've picked up a couple of new swings. That's why I made that, adjustment this week. The sector is in its infancy. It reminds me a lot of us getting into the EV stocks and finding these stocks and the COVID stocks last year before they actually had COVID news, looking at what they do and connecting the dots as them being possible players in this market. With that being said, OCG is definitely, in my opinion, going to be a player in this market. It's very few stocks in this one. Remember, we're assuming the next few stocks are going to get into this market based on what they do. This is an online artwork company, and they also have blockchain and do digital assets. That is exactly what NFTs are. This is a recent uplist stock. It uplisted a couple of months ago. The reason I mention that, because another uplist stock that we've been swinging over the last month or so is NLSP, and it blew up on Friday up to $7 on news. Awesome win. Hit all our targets plus some. We booked our gains into OCG. Now, breakout on this one would be a move above the 50-day moving average, and then I'd be looking for a move to 650 to 7+ as a first target. We've got a positive MACD cross. RSI looks good. This is a stock I think is going to be really involved, and given that it's a recent uplist stock, I can see these guys pushing out press releases. What is probably going to happen, and we've seen it happen many times before, you're going to start to see companies pivoting into the NFT area. You're going to start to see press releases coming over the next weeks and months as companies go, hey, we can get into this hot sector, and that's what we're anticipating right now. MKGI, again, I keep saying this is one of my favorite crypto plays, and it also has digital assets. So first target in this one is moved to 4 to 5. Another NFT play. The other one we picked up as well was TKAT. This is another online artwork marketplace stock. They don't put out a lot of press releases, but this chart is set up and the float is right. We've got a break of 475, and I probably need to pull out a monthly chart. Some of these stocks, there you go. Break 475, we could be looking at 8. And if they actually manage to put out a press release on this NFT sector, this could be a really red hot play. XPL is back into its uptrend line after that little market temper tantrum. 103 break, 115, and then 125, and then off to the races we go. The other one in this sector, UAMY, we still are waiting on that press release. When it comes, it could be explosive. But while we wait, this chart is coiled for a move here. 140, probably see them come. You'll see it even clearer here on the daily chart here. 140, 143, set up very nicely. MACD is still in the toilet. So we've got indicators ready to rock and roll, and if the market continues doing what it did on Thursday and Friday, the small cap stocks, this could be set up for a very nice week. ITP, eventually they will put out that press release, and then everyone will go, who knew they were going to get that news, as they chase it hopefully at $1+, and that's what we're looking at right now. I mentioned it in the chat room. Before the market sold off, when we were playing these stocks and they kept going higher and higher, we pushed our targets higher and higher. Now that we've had this market sell off and a change in the environment out there, you reduce your targets on plays. This may have been a $2 target 3 weeks ago. The market has changed. Now we're looking for 1 to 145. If it gets back to 145, then we adjust the price targets to 2. You have to adapt and learn to adapt with the market. This is not the mania market that it was a month ago, so you reduce your expectations. Simple way of getting into things. A big mistake a lot of new traders make after a sell-off like this down here, they still want it to go back to 2. I'd be perfectly happy with 1 to 125 right now. And if it got to 1 to 125, I'd probably book gains. Whereas a newbie, a new trader who's not really experienced trading through markets like this would be going, well, why would I sell here when it was up here? Not the way to think. If I told you at 60 cents, you could sell at $1, you'd be happy. Yet many times when these stocks get back to $1, these same traders will go, yeah, I'm not selling it. I want 145. That is a thing you should work on changing. SNCA, SNCA, merger plays were red hot last week. TRCH is getting a big move. Remember, these guys in their filings have a merger value of $2.09. This chart is set up for a very nice break over this 155 area, and we're looking at 175 to that 2+ target. Remember, Torch would not move and then started moving as it got closer to its merger deal. Going to be the same thing here on Seneca. At least that's what I'm thinking. INUV jumped back into swing position on this one. This is a economy opening up advertising play, has held up very, very well in this market sell-off. It did dip down with the market, but it's been ranging back and forth for about a week or so. That usually happens right before an upward move. Now you can see here on RSI where you have a downtrend break on RSI, and that is a good thing going into this week, especially when we look down and we see a positive MACD cross coming and stochastics down here. So INUV's chart looks very, very nice for this upcoming week. And also, stocks that do this ranging move back and forth, add 110, move to 120, add 110, move to 120, add 110, move to 120. These are the kinds of stocks that you can build up free positions in just doing day trades every day. The last stock I'm going to talk about today is KIQ. Now that the COVID bill is through, one of the next big pieces coming is going to be infrastructure, and this is an infrastructure play here. Again, another nice strong uptrend in place on KIQ. 105 break for 130 to 50 area. All the indicators are still deeply oversold, but they're, like all these charts, they're now in nice uptrends. So short video this week. Going into this upcoming week, given that it's a Fed week, it's still, my approach is going to be a day trade focus, and we'll probably pick up, maybe depending on the research on DD, some new swing plays, but it's still, in my book, a half position market. High cash, currently sitting at about 85% cash right now, and just taking each day as it is. Not a market to be going overloading in plays. Have a little discipline. The tide will turn. Have a great weekend, guys, and I will see you all in the chat room tomorrow. Bye.